Good morning, everyone. We'll get going in just 2 minutes' time when everyone's got settled. Okay. Good morning, everyone. Welcome to this second webinar in Quantuma's Building Financial Fortitude series. My name is James Ashton. I'm a financial journalist and author, and I'll be your host of this morning's session. Financial Fortitude from Quantuma is aimed at advisors and businesses alike. We know it's a tough time right now, and it will continue to be so when we eventually come out of this pandemic. Businesses will need significant levels of resilience when it comes to managing their people, their money, and the market opportunities that present themselves. So this Financial Fortitude program comprises a series of articles, videos, and events like this one to provide practical insights into what's going on right now. And it aims to take people from the crisis planning right through to the longer term strategy. Today, we're exploring the UK economy and the path to recovery. Clearly, GDP has bounced off the bottom, but the UK economy is about 10% smaller than it was pre-pandemic. Government support has been fulsome, but it creates a series of cliff edges to be navigated as we try to get back to something approaching normality without furlough, without deferral, without emergency loan schemes. Please do send in questions as we go. I've already got some. I'll try to get through as many of them before we finish at 10:30 this morning. And I should introduce today's panel. They are, after all, the people who are going to be answering these questions. I'm delighted we're joined by Jimmy McLoughlin. He was for many years business advisor in Downing Street to both Boris Johnson and Theresa May, probably not at the same time. He's returned to the UK from studying at Stanford University and now contributes to the Times and has recently launched a podcast, Jimmy's Jobs of the Future. Next up, we have Simon Bonney. He's a managing director at Quantuma. Simon is a licensed insolvency practitioner in the restructuring team. He focuses on providing practical advice to companies and people in financial distress and regularly works cross-border. Finally, Louise Durkan is a managing director and head of Quantuma's financial advisory team. She has over 20 years experience of working with a wide range of clients from multinational to owner managed. Welcome all. Jimmy, let me start with you. And let's start with last week's Downing Street soap opera as we talk about recovery. Is this anything more than a sideshow, you know, Cummings and so on, or does this disarray, or as we're now meant to be calling it, a reset? Do you think that affects the path that we're on, you know, back to growth?
So I think it does have implications. I think sometimes the press sort of slightly overanalyze all of this, but politics is so often about personalities and the soap opera element of it is remarkable, the kind of nature, the public nature it plays out in. I think there is a big question about what the pandemic does in terms of it's become very on trend to say we live in unprecedented times and so forth. But every 30 or 40 years, you do get a big shift in the role that the British state plays. So in the 1920s, you had the foundation of the Labour Party. In the 1940s, off the back of World War II, you had the foundation of the welfare state and so forth. And then the 1970s, 80s, you had the rolling back of the state under Thatcherism and so forth. And essentially, we are at that stage again now. And now I thought for the last few years that it would be Brexit that would be that big fork in the road moment in terms of which way would the country decide to go with it. And actually, the coronavirus probably supersedes all of that in terms of the impact that it's going to have on the economy and so forth. And we are at a stage where undoubtedly the state is going to get bigger over the next few years as we look to pay for what the government has funded over the last year. There is a certain element of what is being written about in the press in terms of the Prime Minister's direction on this is, are we going to sort of see the press sometimes rather simply characterizes, two versions of Boris Johnson. There's the Liberal Mayor of London, Boris, and then there's the sort of Brexit Boris of 2016 and beyond. And I don't think it's quite as simple as that. I think that he is committed to the levelling up agenda. He also very much sees himself as wanting to fight the next general election, and does see himself as being prime minister essentially for the rest of the decade. Will be his aim. I'm pretty sure of that. And so that whole levelling up agenda will be the way that he wins re-election and so forth. And that is very important because I know that we look a lot at the regions with Quantuma, and the aspect of it is that actually you're kind of seeing a leveling down aspect over the last few months that's occurred, and that is complete opposite of where he wants to be with that. But the challenge that there has been for a while in government is, how do you balance off taxing wealth versus income? And there has been this growing theme over the last few years that probably we don't tax wealth as much as that we tax income. And I think that's very interesting for how you kind of try and look at it from a political lens of how do you get out of this. And it's all in the context of where I'm coming from with my political experiences. How do you win re-elections and so forth? And that's just some of the interesting things that I know over the last few weeks that have been floated in the press around CGT, for example. There's been lots of talks about the landlords as well, and you have got to think about it in terms of where can votes be won. How can you play these messages out in public? Because you touched on, James, there, the enormous amount of cliff edges that are going to be coming along the line in sort of at the end of Q1 next year. There are a number of them that could be there. And then, of course, you've also got the uncertainty around Brexit towards the end of this year as well. And I think that's another point that I would just say in terms of the I know there's some questions about the Biden presidency and the impact of that as well. And effectively, I don't think you're going to see in the broad global terms a corrective shift as strong as 2016 was. So in terms of the world trade relations with China and all these big issues, the way that the President Trump changed a lot of that, I don't think you're going to see a huge departure from some of the direction of travel. Fine, Joe Biden believes much more in kind of the sort of multilateral organizations, and that will return in a much more broader theme, and there will be a much more sense of normality when it comes to that stuff. But actually the trend of direction on travel on some of the global economic issues around kind of leveling up, you see the same arguments made in the States as well. I don't think that's broadly going to change. I think the nature of the future in terms of the economics of the way that people work are obviously going to change. You're going to see a surge of mini consultancies come out of this, and the Treasury have been looking at how they can kind of equalize that self-employed tax nature that we've discussed a few times before. So I think there are lots of small things that are underlying the biggest trends. But just what I ask people to do is just think about it through a political lens, and what wins votes is often the best way of looking at where the government will try go on these things.
Yeah, that's very interesting. And to bring it back to the economy, Jimmy, I mean, we have, clearly those ideas about where does the tax take go next, because there's £2 trillion of debt. There needs to be, we have to pay the piper at some point, whether it's this generation or next generation. Clearly Rishi, most popular chancellor since Denis Healey, but then you're always popular if you keep shoveling out the money. He has to sort this. He has to address this at some point, as probably a future prime minister if he gets it right. But next week we've got the spending review. So what do you think we see in the spending review? And then I suppose just talk us through some of these other things in the timeline. We've got the Brexit preparedness, which is really, must be on people's minds now. And then I just wonder if there's time to do anything that means the people on this call are facing a very different tax situation in the next financial year, beginning April 2021.
Yeah, so I don't think, in terms of, it's pretty well documented that taxes will have to rise in some form, but at the same time, they're going to need to fire up the engines of enterprise. And that argument isn't really being made much at the moment in terms of, there's lots of talk about building back better and so forth, but what are the practical ideas for how you get entrepreneurship working? It's something that David Cameron and George Osborne were very good at in the wake of the financial crisis when they came to power in 2010. There was Startup Britain. There were all of these initiatives that were brought forward. We haven't seen much of that being talked about yet, but I think that will be of crucial importance. In terms of tax changes and so forth, I think you're seeing ideas floated at the moment in the media. I think it's quite difficult to bring big tax rises in by April next year, just when the economy might be beginning to recover and so forth. If you start hitting businesses with lots more tax, then that's going to be problematic. But like you say, we're going to have to do it at some stage.
I get your point. If it happens now, it's a real passion killer.
Yeah, absolutely.
Yeah. I see, but so it could come. And then any thoughts about next week? I mean, he's been quite flexible in extend the furlough or change this and change that. But I just wonder what more. We've kind of got a flavour today with green jobs and green investment. I feel like I've heard that that announcement before. I don't know if you agree. But
yes, I mean, look, there's always lots of talk around sort of a green recovery and green jobs, and these things take. That industry takes a long time. I mean, it is interesting, like you are seeing sort of how well the UK has done when it comes to solar power and wind power and so on. But these things take, decades to kind of get right and get financially sorted. We're relying on the technology and the enterprise for these things to develop. You can't jumpstart much of that. The most you can do as a government is kind of create an environment. Like the way that I used to talk about it in Downing Street was we make the ground as fertile as possible, but at the end of the day, it's up to the British people to do the planting and the growing of things and so forth. And I think there's a really good way of looking at it, because the government needs to work out what to do on that. I don't think you're going to actually end up seeing that much next week. There's been so much announcements. Rishi gave an interview the other day where he said that he thought that it was going to be the most, he was appointed as Chancellor in February. He thought the most challenging thing that he was ever going to have to do was do a budget within the first 6 weeks of him arriving. And actually that's been one of the most simplest things he's had to do. So I don't think you're going to see massive amounts of tinkering next week, just because there's so much in line. But they will be through the media and so on, as you have so much experience of, trying to sort of put forward ideas and kite flying to see what might work and so on. But it's difficult because we've never been in a situation like this.
No, I know, but I'll probably I'll come on to Louise and Simon now. But my observation would be we haven't been in a situation like this, but actually some of the solutions, some of the way that we pay our way out of this seems to be green jobs. And it was good to see road pricing back in the press as well. It's been, copyright Vince Cable 2010. So, Louise, let me turn to you now. So Jimmy's talked, great overview about, where the economy is and where it could be. And we're clearly not getting that V-shaped recovery. It's a bit more of a U-shape. But we have quite a lot of, despite all the government help that we've seen, there's quite a lot of imbalance. So I know through Quantuma you'll have seen imbalance in the regions in terms of trading confidence, and also imbalance in how big companies have had quite a portion of support, maybe SMEs less so. So I wonder how you see that playing out, whether this is the time for companies to, really do it themselves, or if there's more help that they should be asking for or looking for.
I guess there has been, to a degree, there has been, and we know quite well, there's been a number of winners and losers in this in terms of access to certain schemes and grants and various different funding. And I guess, Jimmy would probably say that the government thinks that they've tried to find a fair approach to all and tried to cover as many bases as possible, but inevitably there's going to be some gaps within that. I think the challenge for many businesses is that where they have had the ability to access certain support and certain funding, whether that's come through the government, through other stakeholders, that there is a point at which they have to continue, and some of that support is going to start to be withdrawn. And I don't think we're really going to see the level of inequality until those things have been removed. Because what we really don't know and what we haven't got a clear picture of is the extent to which everybody has been completely reliant upon that support purely to survive. So I think whilst we recognise there's going to be some gaps and there's going to be some inequality, and there certainly will have been, if we think about just the changes in terms of restrictions that have been run on a more regionalised and tiered basis, inevitably that will have suffered certain geographic changes as well to that. But I think we won't really see the extent of it until this all starts to be removed, and slowly, one by one, those support systems are unplugged.
Until we get off the drugs. Simon, what are clients telling you? I mean, if you would rewound, say, I don't know, 6 months ago, whatever, we would have expected more activity, more restructuring and insolvency work probably by now. And it's an interesting point made by Roger Bibby from Avocet Investments, making the point that with the extension of the furlough position until March next year, we have this effective anaesthetic. And is this creating more risk because there are more people avoiding making these really, really harsh decisions?
Yeah, I think that's a good point. Yes, going back to March, you were in a situation where suddenly the world was thrown into chaos and companies were faced with a completely different challenge to one they'd ever seen before. And there were two parts to it. The first was businesses that fell off a cliff, and there were certain businesses that restructured very much at the start of COVID-19. And then there were those businesses which were encountering challenges, but which they expected to be able to weather until, if my memory serves me right, it feels like a very long time ago, until September, October, when there was this anticipation that we would be back to some form of normality. Clearly, that has been prolonged and is expected to continue for a lot longer. And the level of restructuring and insolvency is to a large extent dictated by the levers that are pulled in order to manage the situation. And clearly the government schemes, JRS, C-bills and B-bills, they've helped companies where otherwise they may have had more difficult decisions to make early. There is a key point in the sense of that providing an ability for directors to continue accruing debt whilst not having to face the reality of what might happen later down the line. And from a situation of how insolvencies and restructuring is likely to increase in terms of volume. I mean, year on year, I think we're 35% down on last year. But that will depend on when A, the government brings back its level of support, but B, probably more importantly, when it removes prohibitions on parties taking action for recovery of debt. And Jimmy mentioned landlords, and that they are a key part of the likely effect of insolvencies going forwards, because there is the majority of balance sheets, a lot of balance sheets present, are accruing levels of debt which will be equal to years worth of profits. And the question becomes larger and larger looming, how are they going to pay for it?
So Simon, you've been operating in this world for several years, and I mean, I think at first the government was congratulated for the support it was offering, but it seems like your concern is, I call them cliff edges. It's how we unwind some of this stuff, how we get back to normal, and how the debt that's been accrued is paid down again. I mean, it sounds like you have concern that there isn't a master plan.
And James, at the moment, I don't think there is, and you know, you can very much sympathise with why there isn't a master plan. You know, no one was expecting a second lockdown probably 2 or 3 months ago, or certainly not in the general public. And the government is doing all it can to help businesses. That much is clear. The question is how effective that help will ultimately turn out to be. And that's a question of, you know, how much debt can realistically be written off, because these are lost months for a lot of businesses. It's not as though they're suddenly going to have a boom of turnover that's going to treble what they were doing beforehand. So this debt that's accruing has to be paid off or written off. And you know, it's a question of whether that becomes taxpayer or whether businesses go into processes that enable some form of repayment.
So you're talking about the nationalisation of the well, but we've already had the nationalisation, I suppose, of huge aspects of the high street. It just depends for how long. Jimmy, I'll come back to you. I mean, as Simon says, it might be a touch unfair to expect Rishi and Co to have a master plan. But what do you think the imperative is? I mean, you can extend the furlough scheme, you know, for as long as you like, but by common consent, there's probably about at least 1 million jobs in the system that don't exist anymore.
Yes, exactly. And I think, you know, points have been made about this. You know, Luke Johnson in the Sunday Times about extending furlough is all very well, but actually, you know, if these jobs aren't going to come back, then it doesn't help. And to Simon's point, you know, we are such a service-based economy that, you know, those services are very difficult to have some kind of rebound, because, you know, meals out and films not watched and all these things, you know, people aren't gonna, they will do a bit more of that when they're allowed to, but they're not necessarily going to make up on sort of, you know, 6 to 8 months worth of it, because there just isn't the time to do that. So the priority for the government will be job creation and how it can do that, because that's what people, you know, care about, and you know, that is what has the biggest impact on your on your day-to-day life, and that is going to be a huge challenge. But there is hope before this, because prior to this sort of coronavirus, we were, you know, despite there being lots of problems with retail and on the high street and so on, we were still at record high levels of employment, and we sort of almost forget that a little bit. So, you know, there are new jobs being created out there, but actually one of the challenges that government has is that they're not necessarily very good at kind of being able to point people towards those things. I mean, if you've been on social media the last few weeks, you'll have probably seen the sort of government careers guidance that gets put forward that people can do, and it's, you know, it's not very intuitive to be able to sort of work out where these growth areas are coming from.
Oh yes, from ballerina to cyber.
Quite.
Or actually, if you saw the one at the weekend, it was from number 10 to ballet, I think, a suggestion for Dominic Cummings.
I also think, just following on from Jimmy's point there, that what we've seen to date with the government is an ability to try and prepare for big business, and the Corporate Insolvency and Governance Act has effectively added tools to a restructuring professionals kit, which are generally fit for purpose for very large businesses. But essentially for the SME market, you know, where we would expect a lot of these jobs to come from, not a great deal has been done apart from scattergun support. With that lack of clear plan as to how to resolve the problem longer term.
I want to come on to some of those points, like the Act and HMRC preferential creditor status. But briefly, Jimmy, we've got so many measures in place. We've got furlough to March. We've got business rates holiday till about the same time. We've got stamp duty holidays. You know, there's VAT deferral. There's all sorts, and of course, landlords moratorium until March. Which of those elements do you think can be pushed further out? What should people be ready for that actually wouldn't be pushed further out? Because it's quite a shock to the system when those are turned off.
Yeah, and as you say, they're all sort of lined up to be at the same moment now, or within the space of a month of each other.
Yeah.
So I think you will see some kind of tapering. I mean, I think stamp duty has obviously put kind of rocket boosters under the housing market. Yeah, that's not actually necessarily what the government wanted to achieve with that. But I think, if you're trying to buy a house now and so on, estate agents are saying the backlog with solicitors and so on is pretty large and quite difficult to do. So I do think you'll see that potentially extended, or at least tapered down a bit, so that it keeps enthusiasm for people kind of moving properties and so forth, because I think that is quite an important part of it as well. But I don't think on the rest of it, there's limited capacity for, continue, it's how long do you kind of continue to do this for? By the time we get to March, we'll be a year on from the lockdown. And, the Chancellor has been pretty open since the start, saying he can't save every job and he can't save every business. And he may well have to kind of get to the point where, that does effectively happen, because you can't, the point you're making earlier about, keeping the economy on life support and so on, you can't do that for much more than a year.
Yeah.
Really.
Yeah. Louise, talking through some of these measures that particularly affect your world and anyone in business or thinking about restructuring and insolvency. So which do you think of those measures are really important to consider? Because we have, as Simon says, the Corporate Insolvency Governance Act, which has frozen winding up orders. I'm interested in your view on HMRC preferential creditor status kicking in from 1st of December. It does seem there couldn't be a worse time for this to come in. And then also we should talk about these landlords, the moratorium currently running to next March.
Yeah, I think taking HMRC first, the timing could not be worse. And I think it does seem to sort of fly in the face of everything that government has been trying to do in terms of supporting business. And I think those of us remember when it was removed, it was seen as a way to support the entrepreneurs, and seemed to, it was specifically targeted at rescuing businesses and supporting businesses getting back on their feet. And it was very welcome when that happened. And I think it has completely the opposite effect right now. And it's inevitable, and I'm sure it's already been happening. It's been influencing, no doubt, decision making. It's been influencing lenders in terms of their approach to funding and their approach to their customers and their clients, because they will see it on the horizon, and they will be making decisions on the basis of the fact that the government will effectively have a carve out in the event of a failure of a business. They will get a share of the money in advance of the lenders, depending on the type of security that they hold. So it is going to restrict decisions, and it is going to stifle opportunity for rescue and recovery, no doubt.
Is there still a window to actually act ahead of that then? There's sort of like 12 days. I mean, a
very short one. I mean, realistically, not an awful lot. And to be perfectly honest, if you're going to try and do something ahead of that, the kind of planning and process that it would take, you should be well into that by now. I think any kind of knee-jerk change right now would probably be slightly uncomfortable and probably wouldn't achieve what you're trying to do. So trying to do anything in a relatively short space of time to address it is virtually impossible, I'd say, for the majority of businesses. So yes, it doesn't give us much to work with, and that is where we will see it, and I can't see that it's going to be a positive change.
Yeah. Simon, to take up the point on landlords, I mean, landlords so often the villains of the piece, but horribly miscast, would you say? I mean, how should they be talking to their partners, their trading partners, to get through the worst of this?
I think horribly miscast is not unfair. I mean, HMRC in our business are always referred to as the unwilling creditor. Everybody else has chosen to do business with a company. HMRC are there regardless. What's happened with the change in legislation is that the landlords have become the new HMRC. They are completely powerless to pursue their debt. And so they've started to be seen as an unwanted creditor, whilst businesses focus on the rest of their business and their trade creditors. They play a massive part in this going forwards, however, because to the extent that they haven't been paid for now 6-9 months, and likely probably a year in a lot of cases by the time we get to March, they are the one party who won't have any government influence to pursue their debts. There are a lot of landlords out there who are engaging with their tenants, trying to do deals, trying to sympathise, but of course they themselves have obligations as companies, whether they're listed or not listed, private or public shareholders, lending, and they have to generate revenues as well. So there's a terrifically difficult car crash coming in that regard, and I'm afraid part of the effect of the legislation has been to see landlords with pent-up anger, and to the extent, rightly or wrongly, that they considered themselves to be a victim of CVAs previous to COVID-19, they now see themselves as being used both by companies who have genuine challenges, but also by companies who are taking advantage of the situation and looking to restructure their overheads in a situation where they might not be able to otherwise.
So, I mean, it seems like there's something of a naivety in the legislation, and we can't really, obviously we've had that 15% bounce in GDP, but we can't really get back to sustainable economic growth, healthy economic growth, until we've worked through, well, whatever you would call it. There's very much this blockage with the landlords. Yeah,
absolutely. I mean, 2008, the description that followed that was huge amounts of zombie companies, because these companies were never fundamentally going to be able to grow or continue long term, but didn't have an imperative which would cause them to cease to exist. At the moment, that's what we have. We have a huge amount of zombie companies. Now, the majority of those companies are capable of being rescued with the right advice and the right procedures, but landlords play a big part in that, and engaging with landlords is extremely important.
And a lot of debt, clearly a lot of debt has to be forgiven. The government is not going to pick up the tab for this.
No, and I think the banks, looking at the banks as a player in this, the banks have lent money because they've been government backed. Simply, banks will always lend to companies where they don't perceive there's high risk. Most companies in this environment are high risk, and so as soon as that government lending is turned off, banks won't be rushing to lend further money. Yeah.
Jimmy, what about this bank's point? I mean, Trevor Overall, who's on the call, makes the point. The British Business Bank has said that a significant majority of the loans to business are going onto the government balance sheet with little appetite for banks to lend. It seems to me that this is not widely talked about and cannot continue. What can the government do about it, as growth may depend on it?
Yeah, so I think it's a really good point that Trevor makes, and it isn't being talked about, and sometimes there is a bit of a lack of understanding in government and the media about how the sort of the bolts and widgets of the British economy and British business works sometimes. And James Dyson has made this point that we seem to talk about pubs and retail an awful lot, and actually there's a whole, the arc of business in the UK is kind of changing and developing over the last few years. So I think it comes back to the point I would say about the political side of it, in terms of going after the banks and landlords and things like that, is that it's not that difficult to do from a kind of political perspective. It's you're not going to see sort of marches on the streets defending bankers and landlords, and so I think that is a point that needs to be considered by business on these side of things. I think that the British Business Bank does have an important role to play, though, in terms of firing up the the economy after all of this. And you're seeing the British Growth Fund as well trying to invest in sort of these upscale businesses, because that'll be a big priority of the government. Over the last 10 years, we've had this great startup success story, more businesses being started than ever before. Most of the time, that is a healthy indicator. That is an indicator of a healthy economy. However, you're seeing an enormous amount of startups this year, and that isn't so much of it, because that's people being forced into necessity entrepreneurship, which is different from opportunity entrepreneurship. And so, but because of the success that you've had over the last few years, and you can see some of the great companies that have been started in the wake of the financial crash as well, the likes of Funding Circle and so on. There will be some amazing businesses that come out of this, but it's how do you allow them to grow, and how can they scale, and trying to turn us more into a sort of scale up nation, and create the kind of Mittelstand that is so often kind of talked about in British policy circles, which Germany has, where there's this sort of huge middle range of businesses that employ a lot of people and manufacture quite a lot of things as well.
Yeah. Louise, I mean, one good example that has been talked about for how a restructuring compromise can be met, and I'll come on to some of the sectors that we focus on shortly. But Cafe Nero seems very interesting. I mean, this compromise with landlords, which looks like going forward, they will be working on turnover-based rents. I mean, is this the model for everyone, particularly for those businesses that work off multi-sites, do you think?
Yeah, I've seen a sort of increasing trend if you look back over the last few months of some of the arrangements that have been entered into, and turnover seems to be the position that the majority want to go, where you've got a multi-site business. And it seems to be, a challenge, I guess, in sort of moving away from the traditional basic rent proposition. I suppose, what we're seeing is, as Simon's already mentioned, there are a number of businesses that are in a position where they have no alternative. Something has to change for them to continue to survive, and this is probably the latest example of it. But what we're also seeing, and it's pretty clear, is that the rest of the businesses out there on the high street are also looking at this model and thinking, well, perhaps I need that as well. I may not be as a stressed position, and I may not have a gun to my head if I don't take this option forward. But certainly that what they don't want is to be sat on the high street in the most expensive piece of real estate that's out there. So I think it's pushing a shift forward. I think there's some practical challenges around it, how it works on an operational level. We've already seen that, a number of businesses have a footprint, but also have an online presence as well. I think there's going to be some administrative challenge in just getting the numbers right. What actually is your turnover for that particular store? So it's not as simple as straightforward as just sort of saying we'll take turnover and away we go, and everybody knows where they stand. It's still going to be a continuous effort to address what that position really looks like, and I'm sure there'll still be some more challenges within it. But you'd like to think that is at least a way of addressing the position moving forward. Obviously, what it doesn't do necessarily is deal with the arrears position. So in cases, what we have to have is that we have to have the two things together. You can't simply just walk away from the historic position without necessarily some other compromise, or, as we've already sort of alluded to, some write-off or forgiveness of that particular position. And we are approaching such a significant level of carried arrears on rents. It won't be the last one that we see. It's interesting to see how it's developed over time, and how more open landlords are to accepting that position. But it still causes a challenge, and I think this sort of lack of ability for landlords to do anything, in some cases it is bringing them to the table, and they are having these conversations. But for those businesses that are on the high risk agenda, I guess from the landlord's perspective, there'll be others lower down the list that aren't getting any traction, because they don't have enough bandwidth to even entertain a conversation with some of them. Yeah,
thank you. Simon, back to you, and staying on the subject of zombie companies, question from Sean Taylor at Canaccord. What's the scale in the UK of these companies, do you think? In the US, there are manufacturing companies that are not earning enough to cover interest payments, sitting on 1.4 turns of debt, according to Bloomberg. But how do you see the position, I suppose, coming into this pandemic of the zombies, and there must be a lot more of them about now?
Yeah, I mean, Certainly, I think they make up a material element of the market. I wouldn't like to put a percentage on it, but if you look at it from a debt point of view, and take the cash flow version of insolvency, the likelihood is that the majority of companies are in a situation where they are at least on the edge, purely in a technical sense. If those companies had to meet the obligations of C bills and B bills on normal commercial terms, or indeed didn't have access to that money, then I think you would see significant amounts of zombie companies, and indeed probably more failure. So the difficulty with zombie in this environment is that it is dependent to some extent on the upcoming legislation and how the government manages issues such as the landlord's ability to recover money. Yeah. Because there are a lot of companies at the moment that if they had to pay their debts tomorrow, they couldn't do it.
Yeah, yeah. Jimmy, how confident are you about next year's economy? It seems to me that we have, there's lots of willingness, but it feels to me like there's so much uncertainty, and we've barely mentioned Brexit, and confidence isn't there yet.
No, I think that is true. And actually, if we were having this conversation this time last year, all we would have been discussing really would be Brexit in the run up to the 2019 election. So I think it's interesting because we talk about the different analogies for what the graph is looking like on the economy, and I think the one I think it looks like a bit at the moment is the sort of square root sign, where it's sort of dropped and it's come back quite a lot, but then it's a bit unsure about. There's almost like a little squiggle about where it goes, and I think that sort of kind of sums up where we are a lot with what happens next year. It's quite unclear. My general view is always to be an optimist on the economy and a pessimist on politics, and so the British economy has gone through a huge amount of change over the last few years, over the last few decades, and it has always bounced back and found a way to innovate. And there are these inspiring stories that we're hearing about, that people have started businesses in lockdown and so on. The challenge will be, can they be scaled up properly? It's people that are taking on side passions and hustles and so forth, and through necessity are kind of trying to make a business of it. A lot of that is very hard. The most common areas that we see entrepreneurship in, retail and hospitality, for example, were thin margins before all of this and are going to be even thinner still. So we need to try and raise people's horizons for it. But I do think there is an element of, whenever you go into a recession, that you get a certain amount of innovation comes out of it, productivity increases and so forth. So I am pretty optimistic about what we can see next year. But in terms of the big growth companies, we're not going to see them coming through till 2021, 2022 out of this period at least.
Okay, thank you. Louise, just to go through some of the sectors that I know you keep a close eye on. I mean, restaurants and bars, I mean, the question seems to be, can they save Christmas if they begin trading on December the 2nd? And it seems to me December the 2nd is now the best case scenario, given that you've got the site of this longer lockdown in Scotland, in Glasgow. I think it's going to be a little bit longer before they can open up. So your views on restaurants and bars, and then into retail really would be very helpful.
Yeah, and I suppose, yes, we are all assuming that date is when everything does reopen, and I'm sure there's a number of businesses that have already begun, planning and looking at what it's going to look like for them on the morning that they can reopen. I suppose the reality is it's about consumer confidence as much as it is about preparedness from businesses' perspective. Yes, there'll be a number of people, no doubt, that will be very keen to get back out on the high street, and whether it's on a social level, whether it's shopping and getting ready for Christmas. So there will be a level of activity. Clearly, what we don't know at this point in time, certainly from that particular part of the industry, there's still going to be a level of restriction around numbers. There's still going to be reduced headcounts going into the stores and into the bars and into the restaurants. So that their income that they would ordinarily anticipate for that period of time will not be at the level that it was. So it's barely going to be touching the surface. They've also got to bring back staff to do that. So they still have to, you know, they've still got their usual costs and other overheads that they need to ensure are all addressed during that period of time. And it just won't be enough. It'll be better than not being open, obviously, but I don't think it's going to do a huge amount. If they break even over that period, then I think that's a good position for them to be aiming for.
So this question comes back, and we've talked about it before on the video. I mean, if you're a boss of one of these businesses, you've got to think, how on earth do I preserve this business going into 2021? And you know, is it compatible? Can I protect my people at the same time?
Yeah, and we talked a lot about reshaping business and the challenges that presents when you think you're planning for one event, and we've seen this happen with the tiered system, and we've seen this happen more recently in Scotland, where people were planning to reopen and last minute things had changed. So, you know, it is really difficult for businesses to see around those corners. And at the moment, we're all assuming this date happens. It could not. If we're going back to a tiered system, it might mean that in certain places it's not a national lockdown, but you're still on a high level of restriction. So you've got businesses that are trying to second guess what's going to happen in the next couple of weeks. And inevitably, we're not necessarily going to get anything out of government until probably the very last minute. So, you know, short-term planning is very, very difficult for any business right now. And how they sort of maximise that opportunity, it's going to be really difficult.
But if all possible, you got to have that plan, have that short-term plan, and keep your eyes on the cash. Hopefully, there's some cash coming in.
Absolutely. I guess the real challenge for bars and restaurants is a lot of the stock and the ordering and the purchases that they need to make are, we're talking about goods that don't have a long shelf life. So that, you know, that they're having to order stuff in, and there's a risk that stuff can't actually be sold and they can't actually put that into cash. So it presents its own particular issues in that industry.
Yeah. And Simon, I mean, with things like aviation and hospitality, I mean, obviously we've seen, you know, IAG, British Airways share price soaring this week, but it feels like those sectors, it's a much longer term recovery. You know, I suppose people will be thinking now, can I book a summer holiday in for next summer? Very much geared to confidence.
Yeah, very much so, and probably a lack of understanding for the majority of what booking a holiday means in terms of insurance, in terms of recovery of funds. And I'm sure there's been a lot of different experiences in the past few months about kind of the recovery of funds and vouchers from bookings that have already been made. I think it is significantly geared towards confidence. You know, clearly a lot of people are desperate for holidays, desperate to get out of their homes, desperate to get out of the country and see some sun, especially in the current climate. But with a huge amount of uncertainty, these are big purchases for you know, the vast majority of people. And without the confidence of knowing that they can follow through with that, or indeed that they can recover their money in the event of further interruption, they're not going to go there. And I think, you know, second lockdown has really impacted from a confidence point of view, because for every journalist that sits there and says the vaccine is great news, there is an immediate but let's not get too excited. And, you know, going back to the discussion on restaurants and bars, there will be a lot of people out there hoping restaurants and bars don't have a good Christmas, because there will be a fear that a good Christmas leads to a third lockdown.
Yeah, I suppose it's the Scrooge-like view, Simon. But yes, I take your point. Simon, I wanted to ask you, we know there are going to be so many insolvencies, restructurings going forward, and we're not being pessimistic about that. Everything points to that. The industry is, I don't know whether it's misunderstood or doesn't get a particularly good press. Do you think there are things that you know, practitioners could do more to explain, you know, the vital role that you play?
Probably, I'll go with probably.
Reasonably good.
Yeah, I think there's two sides to it. The first is that by the nature of what we do, we are unwelcome, you know, entrance to a board meeting. People appreciate the advice we provide, and they are grateful for it when they've been in certain times. But still, no one really wants to meet me in a professional capacity. The issue then follows, of course, that generally speaking, when I'm engaging with other people, especially creditors, the likelihood is that in the majority of circumstances, I'm not delivering welcome news. So there is a natural challenge in trying to deal with our industry and its reputation. I do think actually, and a phrase that I think possibly you or Jimmy used recently, bringing the future forward. I do think part of our engagement with creditors, explaining how we do things, will be more reliant on putting a personality to insolvency and not just 50-page documents that are very dreary, very boring to read, and don't really provide a lot of information. So I think there is a lot more that can be done. But of course, on the flip side of that, for most parties, they'd say they're not interested in engaging with us because we just give bad news.
Yeah, and it's not as if you can buy them a coffee at the moment, is it?
No, indeed.
No. Great. So look, I would encourage any more questions if anyone has any things to ask these three. Sean Taylor at Canaccord is on fire, and I'll come back to one or two more of his if I have time. But first of all, I'm curious to look a little bit further out, Louise. So Neil Errington at Advantage Commercial Finance makes the point about CVA proposals from December next year, and any thoughts on how HMRC will approach them? I think there's quite a lot of change in the pipeline, isn't there?
Well, what we're anticipating potentially, as we've said, is as the various different support mechanisms start to be removed, then inevitably we're going to see some need to address the position. And I guess for certain businesses, certain sectors, then CVAs have become the go-to tool. Maybe we'd argue that there's other tools that need to be considered as well. And certainly the government would suggest that they've put some other measures in place, some of which are only recent, and we don't really see how those are going to play out. But I suppose what we haven't got yet at this point in time is how the HMRC are going to address this, because I suppose we know what they used to do when they were faced with various different proposals and effectively, options around what companies were trying to do. When there'd been a failure for a reason, I guess that business was either there was something fundamentally wrong with the model, there was maybe a significant event that had impacted them, maybe there was poor management, and there was a whole history of issues there. And I guess HMRC had a particular position that they took for those businesses that have failed as a consequence of one of those things. Now, there's going to be a real shift in terms of, you have to give an explanation as to why you are where you are and what's happened, and how many of those proposals being put forward are going to reflect a COVID-19 impact on their business, and sort of try to demonstrate that they did everything that they could or should do during that period of time, and really they should be given an opportunity to move forward. So I suppose what we won't yet know is whether or not HMRC is going to take a standardised position on this, whether there's going to be some room for manoeuvre with them. And I think it's going to be very difficult for them to suddenly start to try and really challenge and put businesses under additional stress to do better in what they're proposing to do. Given what they've just experienced or will have experienced at that point in time. So they're going to have some more flexibility within what they're looking for and what they're expecting. They used to have a sort of a requirement in terms of returns and dividends coming back to them. They had a financial expectation coming out of those proposals. And I think we've yet to get to grips with what that might look like in terms of their expectations.
Do you worry that HMRC has not really got the resource for all this? There's so much stuff going on.
Yes, we know they're already challenged. We know that the organisation was challenged before we even got to this position in terms of what they were trying to do. And
so how does a client deal with that then? Do they have to, I don't know, do you file early or what would the advice be?
I mean, inevitably with any kind of process that we're going to talk about, you need to be planned in advance. You really need to know what you're looking at, and you really need to know what potentially could be the outcomes from it. So yes, we're always going to say the sooner you start thinking that you might need some of these solutions, the better you are going to be going into them, because you know what you're expecting. Our biggest problem, and Simon sort of suggested to this already, that we are not necessarily the most welcome person in the room. However, the sooner we are in the room, the more options you have, and the more solutions that we can present and discuss, and the more planned and organised they can be, the better chances of success. And restructuring in itself does bring recovery, does bring rescue. And some of the entrepreneurs that are out there that aren't necessarily going to be setting up a brand new business. They may be looking at other businesses that perhaps the model hasn't worked, or they haven't survived some of the issues and impacts of COVID. And that is the next step for that business, is through a restructuring and through a process we need to help.
Well, I sympathise, Louise. I mean, journalists aren't always welcome in the room, but I think just like you, when we get in there, people realise we're an essential whatever resource or something. A couple of quick questions. First of all, Jimmy, this is from Chris Goodstone. We've talked about, as an economy, how we're going to pay for the COVID support going forward. What about this point about revamping the tax system? You talked about Boris being in for a decade. This is the time to do the big stuff. So revamping the tax system, for example, shutting down the so-called loopholes, which are used by big corporates like Amazon, Apple and the like, along with loopholes in the SME market. I think those might refer to self-employment. So your view on that, please.
Yeah, so I think, it sounds simple, right? When a government says that they're going to close down tax loopholes and so forth, I often think it's a bit of an indication that they're struggling for ideas, because the government would love to be able to get more tax from these people, but it's just incredibly difficult how you do that. They've tried to reach international agreement with the OECD and they haven't been able to. They've brought in the digital tax, which is taking a bit of money, but it is hard. These companies have huge sway, and they employ thousands of, Google employs 5,000 people in London alone. They pay individually on income tax a huge amount to the UK economy. So it's difficult on that side of things, but I think there is going to have to be some international agreement with this, because one of the interesting things about this crisis compared to a lot of others is that it affects everyone in a similar kind of manner. And so I think international agreement going forward could be much easier on it.
Yeah, and I think, your Google numbers, I think Amazon has something like 40,000 staff across the UK, plus all the delivery guys who aren't on staff. Simon, one for you. This is from Paul Harrington from Griffith Smith. It's about recovery coming through later on in 2021. It's that with the advent of home working, which we're all doing now, what does that do to the commercial property market, do you think? And those, well, I suppose we get back to the poor old landlords again.
Yes, all roads lead back. Look, there's two things going on here, aren't there? There's firstly the challenges to any business that COVID-19 lockdown tiers bring. There is also the forcing of people to look at their businesses differently, look at the ways they operate and change their models. So it doesn't matter whatever business you're in, and indeed however successful you have or haven't been in managing your business through the last 6 or 9 months. The fact is, most people are going to look to make certain changes in their business. One of those is going to be the amount of commercial office space they use versus people working from home more. I know of examples of kind of large PLCs that were incentivizing staff to work at home 15 years ago, and reducing the amount of space they had to take in places like London, where it was hugely expensive. So I cannot see that it will do anything but have a material effect on the commercial property market. The prices that landlords can recover from rent, and indeed the tenants' appetite to change their leases, to pay turnover rents, to look at hybrids where you're paying a fixed minimum and a percentage of turnover based on levels.
And we've seen there's certainly exploration as to what that new model looks like from a fiscal point of view. There was a Deutsche Bank report recently. I think they said that if we're taxed to work from home, it could create an extra 7 billion for the exchequer. Not a huge amount, but I guess worth having. So Jimmy, finally to you, I guess. You take the optimistic route wherever possible. So I suppose to wrap up, we should really be optimistic that all of this stuff that's going on now, we have to go through a number of, there's various things that will happen, but actually we have to be optimistic that there will be new ways of working and new businesses developed as we go into 21 and 22.
Yeah, look, I'm very optimistic about the changes that we'll eventually see through this. It feels a bit like a modern day Renaissance, and you can have the parallels with the printing press and the internet and so forth. Going through the Renaissance was painful, but at the end of it, everyone was a lot better off as a result of it. And that's where I think we'll be. I was asked just before this time last year, I was asked which Jeremy Corbyn policy would I adopt if I was forced into doing it. And actually, I think there was something he had about the 4-day working week as well, which is, you know, giving people more leisure time and so forth. That is possible in this new world. And that could be one of the great benefits of it. I do think we will come out of this with a much better working style, working system, but it's not easy to look at that at the moment when we're stuck with short nights and long days and so forth. But I'm optimistic for the future about it.
Jimmy, thank you. I was sure you were going to say you would prefer to nationalise the water industry, but you've shocked me there. You've shocked me. Look, I'm sorry about this because it's a great conversation, but we're out of time. Thanks everyone for taking part. I think we should follow Jimmy's lead and try and take some optimism out of this. Clearly, there's I think lots that has to be done, lots of restructuring, and the companies that are best prepared for next year are the ones that are absolutely alive to the challenges that they face today. I would say thank you for all your questions, and thank you to Jimmy, Louise, and Simon for taking part. If there are any questions that we didn't have time to address, please follow up with Louise and Simon, and they can help with your queries. We hope you found the webinar useful. There will be another one along very soon, and we'll be posting information on that shortly. And as mentioned before, please do have a look at the website for all the content that's there on financial fortitude, and the URL is quantuma.com/fortitude. And thanks once again for everyone that took part. Thank you.
Thanks.
Thank you.